This is Carl with the three things I'm watching for Friday, June the 6th. Starting out, U.S. weather conditions going to be very key going into the weekend. We got the drought maps out yesterday. Drought did improve across the United States last week, not too surprising given the volume of rains that had moved through, especially in that spring wheat crop. Heavy rains fell there. The thing is, there's talk of a ridge setting up across the Midwest. Started to come out yesterday, gave us a little bit of risk premium buying, softened here overnight. Thing is, yeah, it's a ridge. We're expected to see warmer temperatures, but we're also supposed to see ongoing rain with it. So it tempered that quite a bit. And let's face it, warm wet conditions for a newly planted crop just about perfect. So trading not real willing to put in some risk premium. We got to see drier conditions if we want to see that. Right now we're not picking up on them. And of course we got the excessive rainfall in the eastern corn belt, and trade really does not act to excessive rainfall all that much. Never really has. It's more of a flat price issue, and we'll get back to that here in a second. Also, U.S. soybeans now cheaper than South America's. With the price of the futures, the values, and the exchange rates, we're talking about 30 cents a bushel premium that the U.S. has now. You're going to start to see a little bit more demand, maybe. Now is the time when you start to see China step in. Last year, China started buying soybeans the second week of June. We are now cheaper than Brazil, so it's going to be interesting to see if China does step in and start extending their coverage a little bit. China and President Xi and President Trump held a talk yesterday, and they are going to get trade talks back underway. So that maybe will help us out a little bit on that demand as well. Third and final thing, we are in a flat price driven market right now. A lot of the cash markets across the U.S. just ignoring futures, and buyers being forced to pay a basis premium to get what they need. In the Eastern Corn Belt, 40, 50 over on soybeans, 50 to 60 cents over on corn is what it's taking to get futures to move, or to get inventory to move, excuse me. And that's able to separate the cash away from the futures market. We're now starting to see this out west as too. The thing is with this, what I want to say, and the point I want to get across is, if you have inventory to sell, don't be afraid to make an offer. Don't think you have to take anybody's posted bid. The most they can do is tell you no. And as tight as these buyers are getting, they're probably going to entertain a bid that, even if it's not too far out of line, we will likely see some. With that, we're also seeing, this is from the end users, from elevators. This strength is starting to offset some of the losses we've seen in futures here lately. So make sure you check that out as well. Those are the three things I'm watching today.